Hey everyone, this is David Gellner and Parker Sadakis with the Gellner team of Kidder Matthews. We wanted to sit down before the end of the year and do a general review and summary of 2024 for the retail investment marketplace in the Pacific Northwest, and then give our crystal ball predictions and what to look forward to in 2025. Parker, good to sit down.
Yeah, great to be here. Always excited. My first general question to you is what's the state of the market as we end 2024?
Overall, I would just start with a general comment, which is retail is no longer the black sheep after 10 years of, hearing retail is dead or dying. We've seen a huge retail resurgence in the market, and retail, if it's not number one as far as investor focus and strength overall, it's certainly very close. Specifically, the multi-tenant retail side has continued to surprise, not only with pricing that we're achieving, but just buyer demand overall. It's remained really, really strong, dare I say, peak kind of market feeling out there right now. What are you seeing?
Yeah, I agree. I think, to your point, a lot of net new buyers, who've never owned retail before getting into it. That buyer trend feels to be a lot younger than it once was, with just longer, 20, 30-year outlooks. But that, and I think, on the lending front, there's the lenders who still don't want to lend, but for the most part, all of our clients have been securing pretty solid loans.
Yeah, just to follow that up, I would say on the lending front, we have been advising and continue to advise our clients to go and shop, hire a reputable mortgage broker. They seem to be commercial mortgage broker. We have some great contacts that we can recommend specifically because it seems like the lenders of the past who have been very, very good for retail lending are no longer lending, but there's a pool and a depth in the lending space right now because retail is viewed favorably finally,
Yeah.
and we're seeing a lot of liquidity and a lot of great debt being placed. So the other thing with your buyer comment, not only are we seeing the age of the buyers overall and their investment outlook much more long term because of their age being younger, but also just the first time buyers that are entering the marketplace. We've typically always seen that predominantly in the single tenant space, but multi-tenant, especially in the last 12 months, I would say 70%, maybe even 80% of the transactions under 10 million are first time retail owners. So they're coming from the multifamily space, of course, but even gas stations, hotel owners who want to kind of transition out of their operating a business full time and looking to place their capital into the retail space for the first time. So other than that, I would say, retail in our Pacific Northwest, we're still at record low vacancy levels, 3% plus or minus for the Puget Sound and Washington State in general. Now, the caveat is in city, Seattle, Portland areas, you're trending more towards, 13, 14% vacancy rates. So there's quite the spread and the different retail markets, specifically in the core. But overall, I mean, retail tenant demand continues to surge, and we see no sense of that slowing down into next year. But there's just a ton of new retail tenant demand that's fighting over existing space because of the difficulties in trying to develop ground up in the state of Washington and Oregon.
And with the election behind us, looking towards 2025, do you see any curveballs on the horizon? Anything you're specifically watching for?
Yeah, I mean, I think the big thing with the election, whether you're happy with it or not, as commercial brokers, I think the biggest positive is that all that energy spent on the election this year is now behind us. So whether it's the uncertainty or just the constant noise, that's cleared out, and now we can focus on getting back to business and focusing solely on business. So I'm really excited about that. I wouldn't call it a curveball, so to speak, but I think next year, 2025, we can hopefully hope for bonus depreciation coming back, which would be very advantageous for a lot of our clientele who especially likes to purchase automotive type properties because of this stepped up accelerated depreciation. So that's kind of my 2 cents on that. What about you?
Yeah, I agree. I think bonus depreciation will be a big one. other than that, yeah, I almost see a little bit of the same going into 2025. Maybe not any huge curveballs, outside of what we've already been watching. It kind of feels like we're in the normal, if you will.
Yeah, yeah. I would just say, as far as, the election and all that, one thing that came out this week, and whether, the unlikelihood of it passing, but Washington State, we have came out this week as well, a $10+ billion deficit moving forward in the 4 years. Who knows how that's going to shake out? There's been some articles and commentary on, raising excise tax, raising property tax, and then also a wealth tax for people that are $50 million net worth or above. Way too early to tell. I would just say, that uncertainty in the future, I think, is a disadvantage for us if those talks become more serious. Just because investors want to go, especially nowadays, where they're treated best and where the future is going to be best for their capital and their property. So who knows, but it's something definitely to watch.
Yep, definitely. Looking in the rearview mirror, 2024, what were your kind of biggest surprises or things you didn't predict?
Oh man, I would say, not to be a broken record, but multi-tenant retail. I mean, if you would have told me that interest rates are 6.5%, and we'd be selling shopping centers, $10 million and under at 6 to 6.5 cap rates, so equal to the interest rate, so negative leverage, I would have said, you're crazy. We've always seen at least a point spread between the interest rate and the going in cap rate, unless there's a huge value add component. And so that's been a big shock to me. Our big surprise is just how strong that space is.
I agree, and I think, at least from my point of view too, I think a lot of people were predicting a lot more distress,
Yeah.
and there really just hasn't been any. Because, as you said, vacancies still sub 3%, sub 4% in areas, and as people refinance, they're of course evaluating their future, but it's not creating huge have to sell now types of situations.
That's a great point. I think, when we 2 years ago started to see interest rates go vertical very quickly, I was frankly expecting, a distress, just because if you go from a 4% rate or sub 4% rate to now a 6 to 7% rate, that's quite the difference. And it seems like, everyone, or we have just seen zero distress in our retail marketplace. So I guess that's a caveat to the the fundamental strength of retail, with the low vacancy rates, the rental growth we've seen, and the beauty of triple net leases that have really protected existing retail owners from the rapidly rising costs, operating costs.
How about on the single tenant front? Any segments that have traded at surprisingly low
Yeah.
cap rates or seen a ton of demand?
Yeah, in Q4, and so specifically banks. I mean, for whatever reason, especially on the latter part of this year, we've seen several bank sales, 5 years left on the lease, older properties, 1970, 1980 construction, and they've traded, 6% cap rates or below, which has been frankly very surprising, given what the feedback we've heard from our investment pool, buyer pool, of, hey, banks, kind of the dinosaur, how are they still around? Well, banks certainly aren't going away completely, and we've seen primarily really good pricing that we haven't seen in years on the bank front. So I think a lot of that is driven to, a lot of those sales were right around the $2 million price range. And so that's probably driving a lot of that, is just the lack of inventory, and $2 million single tenant is pretty light right now.
And the other thing I was surprised about on how quickly it happened, I thought we'd still be having really large interest rate conversations for the foreseeable future. And it seems like folks have settled into the norm a little bit of interest rates are probably here to stay. This is the new market we're in, and it's going to last.
Yeah, that's a great point. I mean, so many of our conversations the last 2 years, whether you were on one side or the other, one side thought interest rates would be 4 to 5% by now, with high degrees of confidence, and with the volatility in the interest rates, that's, I think, the biggest thing for us, and future sellers and buyers is just once the volatility has calmed down, thankfully, that interest rate conversation has really ceased the last quarter. People, it seems like, are coming to terms with the new reality, and I think no one really knows or can know what the future holds as far as interest rates.
What lessons have you learned in 2024?
Oh man, a lot. I think the biggest lesson is, in executing on the sales that we have done. I think the biggest change in 2024 versus prior years, certainly 23 and 22, is just deferred maintenance. I think that's the biggest conversation and thing to be aware of coming before we even take a property to market or before you go to sell a property, is just being really aware of, the big item, the big ticket items. So what's your roof? What's the age? How's the condition? HVAC. I mean, HVAC all the time. And then parking lots. Those are big ticket items that have seen a dramatic increase in costs, the last 5 years, certainly. And so, that's been the biggest lesson for me personally, is having those conversations up front with clients and how we're going to kind of overcome those objections if they do come up. We've just seen a lot of buyers push back compared to previous years, where it's not just an easy conversation and meet in the middle somewhere. A lot of these buyer pool groups are, heavily digging into, future maintenance obligations and repairs, because the price points have gotten a lot higher.
Definitely. And the wait times are so much longer
Exactly.
too.
Yeah.
So I think people are planning for that, of not wanting to have whatever has to happen come up and then all of a sudden they're 2-3 months out. They want to stay ahead of that
Yeah.
type of stuff.
Yep, absolutely.
Where do you think the next hot market is? What do you think people should be looking at?
Oh boy. I'll go more location specific this time. I think Kitsap County. It's Kitsap County's time to shine. If you don't know, they moved a carrier from Everett over to Bremerton. So I think that was, almost immediately 10 to 15,000 people if you include the sailors' families. So 10 to 15,000 people in Kitsap County. It's driven a lot of growth, whether it's, retail, certainly. We're seeing a lot of new construction there versus other parts of the state, and a lot of new construction housing growth. So, going back to the fundamentals of retail, retail follows, housing, rooftops. Follow the rooftops with retail, and you'll see new retail or retail start to be performing really strong.
And how about on the tenant front? Are there any sectors or specific tenants that you're seeing expanding? And
Yeah, I think one that's in the early stages. We can mention a bunch, but I think one that I'm hearing more and more about from my developer clients and friends is the automotive space, specifically collision repair. So that business is attracting a lot of private equity money, and those guys are typically shorter term focused. So what that means for us and the developer clients is they want to get, mass store expansion and new store counts rising rapidly. And so, we're seeing a lot of preliminary talks about collision repair, build up or backfill type of locations heading into 2025.
I think too, car washes, very similar, but seeing a lot of car washes. Quick Quack just bought 2 car washes they're going to take over for combined like $8 million.
Yeah. Yeah, what we're going to see a lot of Washington's pretty much been a laggard compared to other states in that space, just because of the difficulty and available land. The car wash space, specifically Quick Quack, we're going to see, a dozen plus of those come out of the ground in 2025. And so I'm excited for it.
I know you mentioned multi-tenant's been really hot for buyer demand, but is there anything else that's seen either more buyer demand than usual or less buyer demand than usual?
I'll start with the less. I mean, less buyer demand. I would say certainly the drugstore space, not anything earth shattering, but with, the Rite Aid bankruptcy and then the store closure news on Walgreens. I think that's just a space that, over the next 5 years, because most of those stores were built, early 2000s, so on 20-year leases. when those leases come up, I think we're going to see, some disruption in that space. So, my biggest comment on that is if you own a Walgreens or drugstore, whether it's 5 year, 1 year on the lease or 2 or 10, start having at least preliminary conversations with a retail leasing broker. We're happy to, provide introductions on who would be the best fit for your specific property, but just have the conversations and know what could happen in the future and be somewhat prepared for it.
I agree, and I think on the less buyer demand than typical, I think this is a carryover from 2023, but in city, Portland and Seattle,
Yeah.
a lot of folks want to be, southwest of Portland or just on the periphery of Seattle.
Yeah.
But in the city cores, it's been, there's not as much developer demand where a lot of those were covered land plays at one point. Now looking at it just as a strictly retail basis, I think folks are just wanting to be in kind of more traditional retail, the strip centers on,
Yeah.
the tertiary of those prime markets.
That's a great point. I mean, 5 years ago, for the whole spread of going back 5 years, 10 years, 15 years, everyone wanted to be as close to the core or in the core as they could. And that's kind of totally flipped. So suburbs or even tertiary markets have been, primarily the focus for the buyer pool. So,
What's your crystal ball in 2025?
oh man. I would say, I think, we'll do the easy one first. I think multi-tenant and retail, it's still the time to shine. 2024 was a great year for our segment overall and fundamental wise. I just don't see anything stopping the multi-tenant, specifically the $10 million and under price point. I just think that's just so strong right now. There's little to no new construction in that space in our markets. And so I just think that with that supply and demand dynamics, that's just not, I just don't see how that changes unless something dramatically with the fundamentals changes. I would say crystal ball as well. I think we're going to see a lot more ground lease deals. I mean, I think 2025 is going to be the year of the ground lease, especially for our developer clients, trying to make anything pencil where you buy the dirt and then do a build to suit for the tenant with construction costs. That's just been extremely difficult. And, 80 to 90% of the new development we're seeing or have seen has pretty much been ground lease deals.
I agree. Ground leases for everybody are, they either really like them or they really don't. But with more and more of them coming out, I think the folks who didn't want ground leases, especially if bonus depreciation doesn't come back, might start looking at those a little bit more closely because I've always liked, in the event that the tenant does move out, you inherit the building, you inherit all the improvements. You don't get the depreciation, but it's very safe and it's going to go on for quite a while.
Yeah, I mean, ground leases used to be reserved for only the best sites or where a tenant really had an absolute need to be. And now with the construction costs and the interest rate environment for the developers and the builders, it's just not making sense most of the time. And so these tenants have such a big incentive from their shareholders or private equity, whoever they're doing their funding is, they're all about growth and store count. And so in order to get more store count, at least in our markets, ground leases are pretty much what's needed or going to have to happen. The other thing I would say crystal ball wise, I think we see a lot more $10 million and above sales next year. The institutions have pretty much been predominantly sitting on their hands, whether that's sales or acquisition wise. So I just think it's only a matter of time where we start seeing some of these larger sales happen. So 2025 will be the year.
Perfect. And concerns? What do you think could go wrong in 2025?
I think, just sticking purely to a real estate, what could go wrong? I think, the biggest thing for retail is twofold. Is one, the health of the consumer. So consumer spending, consumer purchasing power, ideally we see that stay at the existing levels or grow. So that's always a concern, because if consumer spending turns off or we hit some type of recessionary environment, that's like a light switch. It happens pretty quick. The other concern I think is just what the fundamental health is of retailers. specifically, how profitable are they in their locations? And then secondly is we're seeing a huge push for store growth and store count. And when you're doing that, you really hopefully they're making wise real estate decisions long term, because everything in retail, is typically at least a 10-year lease, probably a 15-year lease for a lot of these new development locations. And so, I just hope that the long term, is being looked at as well, and fundamental real estate plays happening.
I agree. And I think from a buyer point of view, with a lot of these tenants still always having to be on the gas pedal to expand, 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 it really comes down to talking with your broker or whoever it may be to really evaluate that specific site on at the end of 10, 15 years. Is this going to be the corner that they really need to be at, or have they put 5 other stores in nearby? What are those plans for that market? Because I think that if they continue to expand at a certain point, you hit critical mass.
Yeah,
So you just want to really be sure that what you're buying is a long term investment, no matter what.
totally.
Is there anything else? I mean, I know we've talked a lot about tenant financials and really digging into those. We were just working on another tenant where the lender said some lenders look at the financials, some lenders don't really care as much. But do you think that's going to be a concern, is these debt loads that all these tenants still have ongoing?
Yeah, I think it definitely is a concern. Just if you take the initial part of a transaction, acquiring a property, you typically have to get new debt placed. So the positive is retail is viewed from lenders and continues to be viewed in a more favorable light than it probably has in the past, for sure. I think if you're a buyer or a seller and you're doing either a new lease with a tenant, I think financial reporting requirements are huge if they're not publicly traded, or at least having, a clause where, hey, if we need to do a refinance or a buyer needs to get new debt on the property, there's an avenue where we can at least get some financials. I think that's something of much more importance than years past. I think that's a big one.
Yeah. And for me, my other concern, or at least something to be very aware of, is with all the new construction, the leases are having language added into them. We've been seeing a lot more. So Chipotle is a great example. A lot of their leases now, have the force majeure clause in there, which used to just encompass more or less an act of God, global pandemic, whatever it may be. But recently they've been putting in language on if they can't find workers, they can close the store down, and every day they close the store down, they're entitled to pay half rent, which I've never seen that before. But I think that's something, at least when you're buying, to really read through those leases, because there's a paragraph here, a paragraph there could make a big difference in 5 years.
Absolutely. No, I agree completely.
And then, if you were to be a seller or thinking about selling in 2025, what advice do you have for a multi-tenant owner to start?
I think the time is now. I think, so cliche for a broker to say that, I know, but the demand and the perception for multi-tenant retail, I mean, it's at peak levels, and the pricing we've achieved for $10 million and under centers, I mean, any interest rate movement down isn't really going to have an effect when you're hitting 6.5% interest rates, or even a 7. I mean, the time is really good for multi-tenant. So just make sure your property is positioned, prior to going to market. Look at your lease expiration dates. Make sure the rollover is staggered ideally, and you got ideally 3 to 5 years of lease term on most of your tenants to maximize pricing. But I would say go sooner rather than later, simply because it's a supply and demand function, where we have the demand but the supply hasn't been there, just because there's been limited amount of multi-tenant transactions and on market properties. So I would just say, if we see an increase in inventory, that may change some of the pricing we've been able to get this year.
And if you're a single tenant owner, what advice do you give them?
Lease term, I mean, I think this year we've seen, it's always been the case, but certainly more so this year, it seems like, is, the difference between a 5-year lease and a 4-year lease is pretty extreme on the buyer front right now. So lease term is everything. It has been, but just making sure that if you have a lease that's below 5 years, let's just say, the positive of the current market environment, 3% vacancy rates, the difficulty of single tenant freestanding buildings to go develop new, and all this tenant activity that's coming into our market, we've seen tenants be much more responsive than years past to early renewals with minimal to no, payments or incentives for them to do that, just because, likelihood of they're either below market, or there's a handful of tenants that would love to backfill their space moving forward. So I would just say, for single tenant owners, lease term, and have conversations with your broker prior to going to market, and flush out some of those. If you can, instead of 5 year lease term, get a 10 year term and tack on a couple other option periods, I think that's highly advantageous right now. And ownership, landlords have a lot of leverage, lot more leverage than they have in years past.
Yeah, it's been amazing to see how tenants who previously would have never responded to an early renewal request, or at least having the conversation and seeing if there's a mutually beneficial, way to move forward.
Yeah.
Any closing thoughts?
Hope everyone had a great 2024, and looking forward to 2025. I think, we're excited for what the new year is going to bring. And if we can help in any way, please reach out at any time. We're happy to help advise behind the scenes, or put you in touch with the right people that can help.
Definitely. I agree. Thank you.
Thanks, everyone.